Hey everyone, and welcome back to the channel. Tesla is the most valuable car maker on Earth with shares trading around $725. Bulls see that climbing above $1,000, while bears think it'll drop back below $500. Either way, this is now a company to watch closely in Austin, with Elon Musk possibly building a massive factory near the airport. Today, we're going to be talking about reasons why Tesla stocks blew up. Make sure you stay to the end of the video as we're about to tell you the reasons why Tesla stocks blew up. But before we get into that, if you're new to this channel, kindly smash the subscribe button. All done. Now, let's get started. Tesla's been the hottest stock on the market over the last year, but most people have overlooked what we think is the most important reason for their success. This is why their shares rose 695% during 2020 and landed on the main stage with their addition to the S&P 500. Now, Tesla's presented a blueprint for how to succeed in the post-pandemic world. While major car producers have been twirling their wheels, struggling to survive after a gut-wrenching year, Tesla's moves have put them in a totally separate camp, comparing them to companies like Roku, Tinder, Apple, and even video game makers. And after turning their focus to building more valuable assets around the cars everyone's pining after, their market cap now stands at more than 5 times the value of GM, Ford, and Fiat Chrysler combined. This revenue-driving strategy is a massive part of why many people compare Elon Musk to Apple's legendary founder Steve Jobs. Tesla's stock retreated from that historic high, but its shares are still close to a cool grand. For some observers, this is perplexing, as Tesla sold just a bit more than 250,000 vehicles in 2019, and the car maker has never posted an annual profit. But the view of Tesla bulls is that investors are pricing the future, and Tesla does have a near monopoly on electric car sales. Anyone betting against Tesla at this point hasn't been paying attention over the last year. In fact, those who bet against them in 2020 lost a total of $38 billion in all. That's because not only has Tesla been riding the electric vehicle boom that's taken over the auto industry, they've also gone beyond that to add services and recurring revenue to their model. With this, they're not just selling a car and banking on one sale every 5 to 10 years. They plan on driving massive amounts of revenue each month from their various services provided to their customers. Among these services is their upcoming autopilot software, car insurance division, and the long-awaited Tesla network, which provides access to charging stations around the nation. Over the last several decades, major automakers have mainly been seen as one-trick ponies. They may come out with some new bells and whistles every few years, but by and large, we've all come to know Ford and GM as fairly predictable car companies. On the other hand, Tesla has gone out of its way not to become boxed like the others. With a bigger version of bringing green initiatives to their customers in any way possible, they've also branched out to produce home energy products. In April of 2015, they introduced a line of home batteries called the Powerwall that serve as energy storage systems in homes or businesses. These connect to your solar energy system at home, allowing you to store up power and use it for backup in case of emergencies. Apple's followed suit, stepping outside the computer hardware industry that made them a household name. They've also branched out into health with the development of the Apple Watch. And after selling more than 31 million watches in 2019, not only did they dominate the wearables market, for years, Elon Musk has been ahead of his time in the auto industry. When other major automakers were busy building just another 4-door sedan, he managed to make electric vehicles a sleek status symbol that people were willing to pay top dollar for. With his goal of creating full self-driving cars in the near future, he's also planning to disrupt the booming ride-sharing industry. Once Tesla owners are able to rent out their fully self-driving cars in the future, some people floated estimates that you can make up to $30,000 per year in a robotaxi network when you're not using your Tesla. However, Musk has also become infamous for overselling the self-driving dream with an overly ambitious timeline. For example, he once said he expected to have over 1 million self-driving cars on the road by the end of 2020. Clearly, we've fallen well short of that goal, although significant progress has been made in that area. Apple had major news of their own recently, with leaks of an Apple car hitting the headlines across the internet. Like with Tesla, we are likely a long way off from seeing anything actually come to market. With many predicting an Apple car won't be unveiled until 2024, realistically you may not be able to purchase one until sometime between 2025 and 2027. There is one company that's already challenging the ride-sharing industry though. Because amidst the multi-trillion-dollar ESG boom, FaceDrive has been providing a green alternative to Uber for years. And unlike Uber, which has been accused of price gouging and taking over 50% of the cut for themselves at times, FaceDrive lets their drivers keep up to 90% of the fare and 100% of the tips. Plus, they recently acquired the electric vehicle service company Steer from the largest clean energy producer in the United States. Steer's subscription model for EV cars should help put an end to the traditional car ownership model as we know it. And that fits right in line with FaceDrive's mission to provide eco-friendly rides wherever their customers need them. Tesla dominated the markets in 2020 with their sum-of-all-parts strategy, and FaceDrive is working on copying that strategy that got them there. Not to be outdone, however, traditional automakers are racing alongside big tech to get ahead of this futuristic trend as well. From GM and Ford to tech giants like Microsoft, Google, and Intel, some of the most exciting breakthroughs in this industry are coming to fruition. Leading the charge is Waymo, a subsidy of tech giant Apple Inc. Waymo may just be the de facto leader in the emerging autonomous vehicle industry. It's already had cars driving themselves across the United States for several years. In fact, in Arizona alone, Alphabet's self-driving cars have logged over 6.1 million miles. To put that into perspective, that means that Alphabet's autonomous cars have driven the distance between New York City and San Francisco over 2,100 times. Or, as the company explains, over 500 years of driving for the average licensed U.S. driver. Even more impressive, however, the vehicles were only involved in 47, quote, contact events, and the vast majority of the collisions were the result of human error, and none resulted in any sort of severe injury for anyone involved. While these tests are extremely promising for Alphabet's Waymo, there are still some hurdles to overcome. First and foremost, these lengthy trials took place in Phoenix, a city not exactly known for extreme weather. Second, an issue that may frustrate many drivers, the vehicles operated in a sort of hyper-cautious mode, driving at slower speeds and sometimes taking unnecessary precautions to avoid conflict. While Alphabet's Waymo gets a lot of credit for these massive accomplishments, a widely loved and wildly popular chipmaker is at its core. Intel Corporation and Waymo teamed up way back in 2017 and have worked together to fine-tune their technology together ever since. Through their mutual knowledge of hardware and software, the tech giants have made leaps and bounds towards building the car of the future. In addition to its efforts with Waymo, Intel has also been at the forefront of developing its artificial intelligence and vision hardware. Back in 2017, it acquired Mobileye, a supplier of camera-based chips and software to the global mobile industry. And now, in a new deal with Luminar, another emerging tech company at the forefront of this movement, Intel is positioning itself as a giant in this new sector. Another giant is also getting into the game. Microsoft's Azure cloud-based infrastructure and edge computing is going to be pivotal in this new industry. Not only will it allow automakers to analyze data and optimize their products, but it will also allow them to conduct advanced tests and simulations to fine-tune their software in risk-free environments. It's even partnering with leaders in the auto industry such as Renault and Audi. Traditional automakers aren't going to be left behind either. Both Ford and GM are betting big on this emerging new industry. In October, auto industry legend General Motors announced that its majority-owned subsidiary, Cruise, has just received approval from the California DMV to test its autonomous vehicles without drivers. And while they're not the first to receive such an approval, it's still huge news for GM. Ford, for its part, has recently revealed plans to launch its self-driving business in 2022. The new vehicles, in partnership with Argo AI, a Philadelphia-based autonomous vehicle startup, will include significant upgrades from advanced LiDAR technology and high-resolution cameras. Ford plans to test these vehicles in Austin, Texas, Detroit, Miami, Palo Alto, California, Pittsburgh, and Washington, D.C. Canada is not likely to be left out of this boom either. Green Power Motor is an exciting company that produces larger-scale electronic transportation. Right now, it is primarily focused on the North American market, but the sky's the limit as the pressure to go green grows. Green Power has been on the front lines of the electric movement, manufacturing affordable battery electric buses and trucks for over 10 years. From school buses to long-distance public transit, Green Power's impact on the sector can't be ignored. Year to date, Green Power Motor has seen its share price soar from $2.03 to a yearly high of $28.45. That means investors have seen a 1,300% gain since the beginning of the year. And with this red-hot sector only gaining traction, Green Power has a lot of room to run. NFI Group is another one of Canada's premier electric bus producers. Though it has not yet rebounded from January highs, NFI still offers investors a promising opportunity to capitalize on the electric vehicle boom at a discount. In addition to its increasingly positive financial reports, it is also one of the few businesses that actually pay dividends out to investors. This is huge because it allows investors to gain exposures to the booming industry while the stock is cheap and steady until the market finally discovers this gem. Westport Fuel Systems is a unique way to get in on the green boom of the auto industry. It helps build the tools needed for car makers to incorporate fewer damaging fuels like natural gas. Though natural gas doesn't get quite the attention as electric vehicles do, there are over 22.5 million natural gas vehicles on the road across the globe, and that market is expected to grow as the energy transition takes off. Magna International is a great way to gain exposure to the EV market without betting big on one of the new hot automaker stocks tearing up Robinhood right now. The 63-year-old Canadian manufacturing giant provides mobile technology for automakers of all types. From GM and Ford to luxury brands like BMW and Tesla, Magna is a master at striking deals. And it's clear to see why. The company has the experience and reputation that automakers are looking for. Another way to gain exposure to the electric vehicle industry is through Auto Canada, a company that operates auto dealerships through Canada. The company carries a wide variety of new and used vehicles and has all types of financing options available to fit the needs of any consumer. While sales have slumped this year due to the COVID-19 pandemic, Auto Canada will likely see a rebound as both buying power and the demand for electric vehicles increases. As newer exciting EVs hit the market, Auto Canada will surely be able to ride the wave. While you are here, go ahead and click one of those 2 videos on your screen. See you there. But before you do that, head down to the comments section and let's know your opinion on Tesla's stock. We would love to hear from you. There you have, fellow investors. Don't forget to give this video a thumbs up and subscribe to this channel. See you on the next one.